All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good news stuff for you today. And the first thing that I would like to talk about is the Ethereum Classic 51% attack, allegedly worth 460,000, and that there are rumors that the attack originally began circulating on the 6th as opposed to the 7th when most of the articles came out. Now, one thing that the Ethereum Classic developer said that this wasn't really a 51% attack, even though it was. I read an article that they said that it was a whole bunch of new Ethereum ASICs coming online in China, so it was more like a greedy miner attack as opposed to a 51% attack. But I asked the question, what's the difference? But a 51% attack was confirmed to have hit Ethereum Classic network on Monday, the 7th. And when a 51% attack is successfully executed, hackers gain the ability to reorganize a blockchain or even replace a blockchain with their own, in addition to a number of other opportunities for malicious behavior that this reorganization or replacement grants to the perpetrators. A 51% attack, hackers can double spend, that is, the same coins can be used in multiple times in fraudulent transaction. And rumors of a 51% attack on Ethereum Classic originally appeared January 6. Reports that Ethereum Classic may have been experiencing a 51% attack originally appeared the 6th in a Chinese-based coin journal. And the publication wrote the transaction rollbacks have been triggered, an alert for Chinese blockchain security firm Slowmist. Kind of like that name, I don't know why. The Ethereum community followed up on the development of the incident immediately and learned that there is a private mining pool that achieves more than 50% of the total network hash rate at certain times. Ethereum Classic itself responded to the report with a Twitter post claiming the Ethereum network was operating normally. Just fine. It's fine. Because they essentially created a separate chain. Essentially an Ethereum ASIC developing company decided to test out their ASICs, and turns out there was a whole mess of them. However, the Ethereum Classic changed its tune less than 8 hours later, saying, imploring all exchanges and mining pools to allow significantly higher confirmation time on withdrawals and deposits. And then, without expressly confirming that the attack had taken place, the Ethereum Classic team then retweeted the original CoinNest article. At the time of writing, the attack appeared to have subsided, and the Ethereum address that is suspected to be associated with the attack has been silent since it mined block nearly 24 hours ago, some odd number block. However, some controversy arose around the attack when US-based crypto exchange Coinbase came forward and said it noticed a deep chain reorganization of the Ethereum Classic blockchain that included a double spend on the 5th of January. A full day before the CoinNest report, Ethereum Classic responded to the report with a tweet saying that unfortunately Coinbase did not connect with the Ethereum Classic personnel regarding the attack. So, essentially, everybody's at fault on this one. Coinbase is like, hey, look, there's an Ethereum Classic attack, and then they didn't get a hold of Ethereum Classic developers. And didn't some of the developers, basically quit and go away? Yeah, that's true. So there's some other Ethereum Classic developers. So Ethereum Classic is just Ethereum Classic, and nobody really uses it anyway. But 460,000 lost in this 51% attack. One thing you can do in a 51% attack is essentially the double spend. So you can send the coins somewhere, send them to an exchange at the same time, and if you have enough hash rate to do that, you can send it somewhere and send it somewhere at the same time and convert both transactions yourself. And once they reach the exchange, you can actually pull them back off of the exchange fast enough so that you end up getting all of your coins back at once. Otherwise, you would just send it to one address and then your coins would just move. But instead, you moved to 1,000 coins here and 1,000 coins there, and then took the 1,000 coins back and then the 1,000 coins back from where you sent it, and boom, 2,000 coins. So yeah, not good. Double spend. All right. Moving on to the next article. Bitcoin price holds 4K as one transaction sets a 2009 volume high. And so did one whale move Bitcoin above $4,000? So data from Bitcoin ticker confirmed a slight reversal for a Bitcoin price at 4,000. And after remaining around those levels for around 18 hours, a U-turn set in. declined to 3,800 before current levels of 4,000 again. The reason for the fresh volatility, commentators have speculated on social media, was a single transaction, according to Twitter Whale Alerts, which publishes automated, I can talk, I swear, notices whenever large Bitcoin transactions occur. One investor moved 2,521 Bitcoin, 10.1 million off cryptocurrency exchange Bitstamp to a private wallet Sunday. And this article is, I think, a couple days old. It's actually from yesterday, so it started to talk about a downturn after that, which, now we're back at 4,000 again, so the downturn, essentially part of the article doesn't really fit. But one transaction may have caused that, and that makes a lot of sense, because if we go to CoinMarketCap here, we could see a lot of these sort of whale transactions. If you just look at, 7 days, you could see just these big hunks of transactions. There's on the 6th there, from 3,800 to 4,000. So it's really only a difference of 200, but you can clearly see that happened virtually instantly. And a lot of these movements have to do with whales who are moving a few thousand Bitcoin at a time. No big deal. The only thing that I like to talk about when it comes to whale movements like that is that if there's a whale purchase upwards, a lot of the time there's a whale selling a few days later. They sort of allow it for a few days so that it can kind of go up in price a little bit and then sell. Mysterious whale movements. Science is still trying to track the whales, and it's not working so good. But either way, in the case of a bull run, they might buy and not really sell later on. But right now, we're sort of in a stagnant period, and we don't know if it's going to be a bull run or not. I mean, a lot of people are very bullish at the moment, but who knows? Might go back down by the same amount in just a couple days anyway. But the main thing I kind of wanted to talk about today, and unfortunately there's not a lot to talk about. It's a pretty brief subject. The Dark Overlord on Steemit has been removed. And if you don't remember this story, the Dark Overlord on Steemit was the ones who were leaking some of the 9/11 insurance papers. And so they went to Steemit in order to leak some of these papers for Bitcoin, essentially. At first, they sort of started off like saying, hey, we will release these documents unless we get Bitcoin. And then it kind of switched saying we won't release these documents until we get Bitcoin. So people were giving them Bitcoin and then they were releasing the documents. Now, they have been removed from Steemit, which raises a lot of centralization questions. So Steemit is supposed to be a decentralized place where you can blog and vlog freely. Yet, the Dark Overlord was removed. So now, if you think about it, now Steemit is solely responsible for all of the content that is on their page. This is why some bloggers, vloggers, etc. go to these decentralized places like DTube and Steemit and BitTube or whatever, so that they could put whatever they want on there, so they could be left-wing or right-wing or whatever, and put their content on there, and not really have to worry so much about that problem. And Steemit was one of those. But now, now that they have been removed from Steemit, as you can see, if you click on them, they are just gone. Sorry, the page does not exist. Now, they're sort of solely responsible for all of their content. If they removed one, they have to remove all of them now. Now they're in a sense... Now, in a sense, they have a lot more responsibility. Since they deleted these people, they have a lot more responsibility and to look at all of the content and delete all of it fairly, which essentially eliminates any centralization at all. So moving on, token NASDAQ exchange to enable trading of NASDAQ-listed companies. So we're going to move through this one fairly quick. Estonia-based DX.exchange announced Thursday it would launch its trading platform January 7th, allowing clients to purchase crypto tokens representing shares in different tech firms listed on the NASDAQ exchange. Customers will be able to use selected cryptocurrencies as well as fiat pairs to purchase the tokens. So this is interesting, and yet it's not interesting at the same time. So the thing that's interesting about it is that now you can essentially buy shares in a company just like stock with tokens. However, they are not the stock. They are the company stock as tokens are backed by real world stock. So 1-to-1. So at the same time, they are backed by real stocks, yet at the same time, it's not really the stock. So if you want to buy stock, why not go to the stock market? Well, because the stock market is pretty expensive. Sometimes we're talking like $8 a trade, depending on what exchange you use. So if you're not buying thousands of dollars worth of stock at a time, $8 is really going to chunk your profit something fierce. So this should be a cheaper way to do it. So again, that was dx.exchange. It's Estonia based. I'm not sure if Americans can even sign up to it, but it is pretty interesting. So it generates ERC20 tokens to represent each share of a company. So interesting, but I don't plan to invest in that. But some people might, because they are into stock a little bit more than I. But I'm not sure if that 1-to-1 ratio. If you're going to buy stock, why not just buy the stock? And why buy the token if it's not really the stock? I don't know. Either way. Russia plans to ditch the U.S. dollar for Bitcoin, says a university professor, says basically hearsay. So this article is interesting, but with a grain of salt. Speaking exclusively to Mickey Vladislav Ginko, I got nothing, of the Russian Presidential Academy of National Economy and Public Administration. Wow, could you add a few more words to that? Believes a new U.S. sanctions will push the Kremlin into diversifying its cash reserves into Bitcoin. So he says, he's a university lecturer with ties to the Kremlin. So Ginko, who has ties with the government going back 20 years, says the move will happen in a matter of weeks. Ginko has in recent times appeared on various Russian media platforms clamoring for the adoption of Bitcoin as a haven asset. U.S. sanctions may be mitigated only through Bitcoin use. Because of U.S. sanctions, Russia's elite is forced to dump U.S. assets in U.S. dollars and invest hugely into Bitcoins. Central Bank of Russia sits on $466 billion of reserves and has to diversify in case there are limited opportunities to do it. So, do I believe this? Maybe. So we'll have to see in a couple weeks. Is Russia going to actually do it or not? So this is mostly hearsay. This is not like any kind of Russian official. It's just with ties to the Kremlin. Now, what does ties mean? That could be anything from you literally worked for the Kremlin or you worked like for the Kremlin. Like you worked at the Kremlin or you worked like for like the Kremlin in some kind of shape or form. Like maybe like they had to sign maybe they one time sent you some documents to look over and you're like, yeah, this looks good. And you're like, yeah, I work for the Kremlin now. So who knows on that one. Moving on to the next article here, another quick one. Epic Games denies Monero support for the online Fortnite gift shop. So the Fortnite fans were excited about the rumor that the blockbuster online video game was accepting Monero as a means of a payment, but no. Actually, Fortnite's brief foray into crypto was accidental. We worked with a partner to open a merchandise store, and somewhere along the way, Monero payment was enabled, he wrote in his Twitter account, commenting the recent news, which made a stir among cryptocurrency enthusiasts. So Monero support at Retail Row is now disabled. Googling this, there's quite a rumor mill out there. No, Epic doesn't have any cryptocurrency partners, and aren't in any crypto partnership discussions with anyone. We do read lots of papers and talk to smart people and learn more in anticipation of the eventual intercept, he added. So, no, false news, although it wasn't necessarily fake news. Let's not say fake news, because this was actually, you could actually send them Monero for a little while, but it was an accidental thing. So maybe whoever they partnered with for the store, maybe that partner automatically put Monero on people's, maybe they did it for fun, maybe they did it as a joke, maybe they did it because they thought they would like it, or maybe they did it because it was sort of an automatic thing with using this partner's merchant payment system, like just automatically moved over all the coding, which also included Monero. Because it wasn't just Monero, you could, it was, I can't even remember what it was, Gobi or something, I don't know, some kind of payment system that used Monero, so you would have to go through that to pay the Monero. Moving on, so that's all not good. Not happening. It would have been nice, but So Bitcoin will pass 7 trillion gold market cap, Winklevoss twins say. Of course they say it. Hey, Winklevoss twins, you gonna lose another Facebook? On social media, entrepreneur and proof of keys organizer Trace Bayer joined Tyler and Cameron Winklevoss in contemplating a bullish future for Bitcoin. Since launching regulated U.S. cryptocurrency exchange and trading platform Gemini, the Winklevoss twins have staked huge amounts on Bitcoin's success, despite opening up and trading larger market cap altcoins. Bitcoin is certainly the OG crypto. It's hard to defeat network effects, so in terms of hard money, Bitcoin is most likely the winner in the long term, and his brother was no less enthusiastic. Our thesis around Bitcoin's upside remains unchanged, he said, discussing their position on cryptocurrency since the Reddit appearance in 2015. Since their last Reddit appearance. And we believe that Bitcoin is better at being a gold than gold. If we're right, then over time the market cap will surpass the approximately $7 trillion market cap of gold. By that calculation, given the presumed eventual total supply of a single Bitcoin would ultimately be worth $333,000 and $333. So that's with the total supply cap. So that wouldn't be for quite a long time. But if it was a $7 trillion market cap now with only 17.5 billion or so Bitcoin or million Bitcoin. Oh my God, I'm getting all kinds of numbers. It would probably be a lot more than that. It might be like $400,000 or $500,000 a piece. But is it going to be that anytime soon? Highly doubt that. Empty. Infinitely expandable wealth storage vessel to capital flows as a sterile asset. Price increase is wealth transfer from other assets. A black hole in the world's balance sheet. So we got this picture here. And global institutional assets under management, 110 total trillion dollars we're talking about here. Each square represents $100 billion. Retail crypto market cap is in green, and crypto institutional AUM $5 to $7 billion. So this is what we have here. We literally can't even see the green retail crypto market cap. I don't know where it is. So basically, this is like crypto. This little blue right down here, in a nutshell, that's crypto down there. And this is like the rest of the world's money. So you can see how much more money can essentially go into crypto. So one day it's going to be big. So I'd hold on mostly probably to Bitcoin. That's probably just the way to go in the future. Here's the thing: is that you never know what's going to crash more or less. And I'm not saying be a Bitcoin maximalist. I'm not saying Bitcoin will make you the most money, but Bitcoin is definitely the most stable of them all, and is the one that's likely to last the longest in terms of a store of value. In terms of like a actual currency or a smart contract coin, not so much, but a store of value in just being the brand name of crypto. $136 billion market cap, so we are ahead today. $4,000, nearly $4,100 Bitcoin, halfway. Let's call it halfway. And Ethereum, 151 bucks. Bitcoin Cash, 161. So still fighting around there. And now Ethereum is pretty good and far above of Ripple. But who knows if Ripple's going to take back Ethereum or not. That number 2 spot. I thought Ripple would stay in the number 2 a little bit longer than it did. It did stay there for quite a while, but then Ethereum got pumped and took it back on over. Tron pumping something fierce as well, because everybody knows that Tron is amazing. Decentralized internet, because everybody knows what that means. So, of course, everybody's going to buy into it, because, I mean, if you know what decentralized internet means, of course you're going to buy into it, right? Because decentralized internet, duh. Like, I don't even need to explain it to you. Tron. But that's all I have for you guys today. Make sure you subscribe and like to this video, because that helps a lot. And, got social media links in the description below. Steam, Twitter, Twitch. It's always the 2 T's that throw me off. Twitter and Twitch. You know what I'm saying? Throws me way off. So go ahead and follow on those as well. But I hope you guys enjoyed this episode. And as usual, I will see you guys next time.